Good evening, everyone present over here. It's really delightful to see the kind of enthusiasm our students this year have for the upcoming budget. So we'll directly move towards the union budget. We all know that our country is focusing more nowadays towards a cashless economy, digital world, digital India, which is our government's vision. And as said by our dean just a few minutes back, that we have lots and lots of hope this year from the coming union budget, because railway budget is getting merged up with the main budget, as well as when we see the budget is also preponed to the 1st of February, which used to be held in the last of February since last so many years. As well as Sir said, that the planned and non-planned which used to be there in the budgets previously is no more any longer in the coming budget. So we'll now move to the panelists. First of all, I'd like to invite you all to today's discussion. First, I'll move to Kushal. Kushal, as we all know that IMF has predicted that our GDP will fall down to 6.6% and even compared us with China's economy. And when we see and have some recapitulation of the last year budget by our finance minister, we see that many amendments in the taxation part has come up, like 1% tax on transaction of the goods and services done above 2 lakhs, as well as what we expected, that the change in income tax slab should come into picture. It didn't come, and it even hampered the common people. So what do you expect, and what do you feel that the last year budget wasn't paced with our Indian economy?
Well, good evening one and all present here. I am Kushal Tulsyan from MBA second year. Taking a look back at the reviews from the budget presented last year, there was a lot of hue and cry about the corporate taxes to be lowered. And for the government, for companies with revenue having less than 5 crore rupees, they decreased the corporate tax rate by 1%. From 30% including all the surcharges and cess, it was reduced down to only 29% with all surcharges and cess. So there was only a minor change as far as corporate tax rate is concerned. The second most important part was the service tax rate. Initially, at the when the budget was presented, the existing service tax rate was around 14.5%. The tax rate in the previous year was increased from 12.36% to 14%. But that Swachh Bharat cess, which led to the increase in tax to around 14.5%, there was an additional increment of 0.5% by including this Krishi Kalyan cess. So there was around a 15% of service tax rate prevailing at that time. The next most important point can be the excise duty, which was raised on tobacco products from 10% to 15%. So there was a sharp hike in the tobacco products selling, which led to the duty to be around 15%. The last point I'd like to add is the excise duty of 1%, which was imposed on the articles of jewelry except silver. So the government last year was basically concentrated on getting as much revenue as possible from the taxes by increasing the tax. And one last point I would like to add is the dividend, which the initially company used to pay dividend distribution tax. And for the major addition in the last year budget was the for dividend income of more than 10 lakh rupees. An additional 10% tax was imposed on the gross value of the dividend over 10 lakh rupees. So these are the major reviews which can be given from the last year's budget in the taxation part.
So your reviews are mainly focusing on government increasing the revenue through increasing the taxation and not meeting up to the expectation of the common man, that we expected that some changes in the income tax slab should come into picture. So Kushal, what do you think that after going through the last year budget, what do you expect to come in this year's budget, which is to be announced in February 1? Like some of the points we expect that GAAR, which was to be implemented a few years back, it was delayed. So do you expect the GAAR to be implemented this year, as well as we all know that one tax for all, GST, which we all are waiting for, so that all indirect taxation can be overcome and we just have one tax for all. So do you think that these implementations will come into picture?
Well, first looking at as a common man, we can say that a common man has a lot of expectations from the union budget.
Just one
Yes.
request. You address to the students.
Okay, sure, sir.
You address to the students.
Okay, sir.
And they should ask the questions. You have set the context.
Yes.
You make interventions to answer that. But let the questions come predominantly from
Sure.
students. Just address this.
Okay, sir.
You're doing very, very well.
Well, taking a look back at the union budget, as a common man, we have lot of expectations from the budget. Well, considering the post-demonetization effect, on 5th November, suddenly a person named Narendra Modi on one fine evening announced that the demonetization is going to happen, and all of a sudden everything went in chaos for a sudden. So, post-demonetization, our finance minister, Shri Arun Jaitley, has repeatedly told that the tax exemption slab, which will be increased from 2.5 lakh rupees to somewhere around 3 lakh or 4 lakh rupees. I would like to quote a data that according to statistics, only 3% of the total Indian population pay their taxes. So this is being thought that while increasing the tax slab from 2.5 lakh rupees to 3 lakh rupees, it will encourage more people to pay their taxes. The next point I would like to add is the pension plans. It has been thought over from last 3 to 4 years that the income from the pension will be made tax-free. This is going to be somewhat an added advantage to the adult people in our country, and moreover to that, the income tax authorities, for them this department will be something which will be not under their consideration once this department goes tax-free. The next point I would like to add is the corporate tax rate, which has been under a lot of talks for last many years. Our finance minister, Shri Arun Jaitley, in last budget speech also told that the corporate tax rate prevailing in our country is 30%, which is more than every other Asian countries where the corporate tax rate lies between somewhere around 16 to 25%. So a decrease in corporate tax rate around and bringing it to about 25% is highly likely. In addition to that, one industrial body, Confederation of Indian Industry, has told that if we include all the surcharges and cess and we remove all the exemptions given to them, the corporate tax rate can be reduced down to 18%. So there is, in the corporate tax part, there is a lot of expectation from the government. Coming to your point of...
Can I make a small request?
Yes, sure.
What you kindly do is, after you set the context, let each one of them speak for about 2 minutes. Each one of them speak for 2 minutes. Then you do it open floor. Is that okay? So then you let each
Everyone can listen.
So wherever a certain point has been made, can you don't repeat it? Anything, and then you try to see that there is no repetition. There is no repetition. You have made a lot of points. What has happened that
Yes.
you have really studied and you have made a lot of points. But what is the issues and what are the recommendations? Isn't it? What are the issues and what you can do is, you just say what are the issues and what are the recommendations. Is that okay? Next.
Good evening, one and all present here. I am Srishti Jain from MBA second year. According to me, achievements of Union Budget 2016-17 for the capital market were a comprehensive bankruptcy code was introduced for banks so that they could better track and control over the monetary transaction so as to trace the black money. The amount sanctioned as part of the Pradhan Mantri Mudra Yojana was increased to 1,80,000 crore rupees in order to refinance the microfinance units. The government also decided to list some of the general insurance companies on stock exchange, such as the New India Assurance Company and the GIC, that is General Insurance Corporation of India. But it could not be implemented in the year 16-17, so hopefully it will be implemented in this financial year, that is 2017 and 18. Also, SEBI developed a new derivative product in the commodities derivative market, which is yet to come in the market. RBI facilitated more retail participation in government security rather than wholesale participation to increase the flow of money market in the economy. And lastly, the Securities Appellate Tribunal, the members and benches of the Securities Appellate Tribunal was increased to ensure quick justice. This year, some of the major expectations from Union Budget 2017-18 for the capital market are that is implementation of POEM rules to stop evasion by the foreign companies. POEM stands for Place of Effective Management. If a foreign company's place of effective management is in India, then it is treated as an Indian resident company, and hence its global income is taxable in India. The intent of CBDT is to ensure that there is no retaining of the foreign reserves outside India. Despite government's many efforts, POEM has not been able to be successfully implemented. But this year, hopefully, it should be implemented effectively so as to increase our foreign exchange reserves and to stop the tax evasion. Another major point is this year government has decided to link the tax exemption limits to inflation, which would result to the development in insurance sector, as more and more investors would like to try to invest in the insurance sector. On the mutual fund part, there should be some relaxation on equity-linked saving schemes. Previously, tax was charged on 80% of the average income from the equity-linked saving schemes, but this year there is a speculation that it can be reduced to 65% so as to attract more investors. Another part from mutual fund is that the tax anomalies in the tax treatment for Indian equity-oriented fund of funds should be removed so as to bring them par with other mutual fund schemes. Another major point is NBFCs should seek more parity with the banks. The principle of taxing income on sticky advances as they are received in the year which they are incurred is only available to the banks only. This benefit should also be made available to NBFCs so that they could provide more loans and advances to rural people. And some other major points are, this year government aims to achieve the fiscal deficit to 3.5%, which was earlier 3.9% of the GDP. And last but not the least, the most important point is, this year there is a speculation that government could increase the taxes on capital gains from stock investment. The current rate is 15%, which is speculated to be increased to 20% this fiscal year. So these are some of the major expectations from the capital market sector in which should take place in the Union Budget 17-18. Thank you.
You have begun very, very comprehensive, very comprehensive.
Good evening, one and all present here. I am Rahul Singhal from MBA first year. You break it, you fix it. That is the sentiment ahead of Indians' annual budget this week. Amidst the signs of note ban of 86% of India's country currency has disrupted demand, snapped supply chain, and created a huge downfall in credit growth. So investors are just expecting a fiscal lollipop from our Honorable Finance Minister Sri Arun Jaitley. Now, talking about demonetization and black money, on a broad level, it's a terminology used by politicians and bureaucrats to manipulate the mind of the voters. On a broad level, there is no such definition for black money, because if you look at a salaried employee, if he pays a bribe of rupees 100 to a constable, that's a black money for a constable, but not for a salaried employee. And if again that constable uses it in a restaurant and the restaurant provides a bill for it, so again that black money has gone into white money. So on a broad level, there is no such definition of black money. It's just a terminology difference which politicians use to make it to manipulate the mind of the voter. With talking about ATMs, last year government has planned to increase ATMs so that every rural population has an access to it. But since demonetization and making India in digital era, the government has focused more on POS than ATMs this year. Because to make the more number of ATMs, there will be more cash transactions, which will affect the growth of digital era. Now, talking about financial inclusions, there are various sections under Chapter 60 of Income Tax Act, which starts from 80C to 80U, and hardly people are aware of all the sections. A common man generally understands 80C, and last 2 years back 80 TTA was included, which gave exemption on interest on saving banks account. So if you go through the sections and plan your savings well, there will be a rise in consumption of an individual as well. So which a common man understand is 80C. If you talk about 80C only itself, there is an exemption limit of 1.5 lakhs per annum, which is supposed to be minimum 2 lakhs this year, as expected. And 3% of India's population file income tax return. So 24 lakhs into 2 lakhs, that itself is a huge amount to be included in the financial sector for the benefit of infrastructure, as well as to meet the deficits in the budgets. Thank you.
Okay, Rahul, just one thing, maybe with GST coming into the picture, you 3% will increase for some hope of people filing taxation.
That's fine, but see, that will affect more of an industrial sector, because there is a lot of unnecessary documentation work being done, especially with regard to interstate sale purchases. CST Form C is just a bogus. Because if you are a registered dealer, you have TIN numbers registered with your state governments. So what's the need of C form to prove it that it's an interstate deal? And just because of one bogus C form, the whole lot of transaction gets delayed just because of one dispute. So lot many things will also affect the industrial sector because of implementation of GST, especially with regard to unnecessary document filing and all, which will make business more ease.
Yeah, coming with the ease of doing it.
Yes.
Yeah, please follow.
Good evening, one and all. I am Poulomi Sikdar from MBA 1. So the union budget of 2016 and 17 was a mixed bag for all the sectors, particularly in the finance sector. But more specifically, if we talk about the banking sector, we have noticed the major problem out here is the rise in the non-performing assets. Going by the latest records of June 2016, the non-performing assets touched 6.5 trillion, which is a huge amount for the banks to recover. So Mr. Arun Jaitley has come up with the Indradhanush plan of infusing 25,000 crore. They have already for allocating 25,000 crore. Already 75% of the 25,000 crore has been infused, and the remaining 25% depends on the performance. This is mainly done for increasing their lending activities and for helping them raise money from the government. Now, if we draw a comparison between the Indian banking sector and the banks in the emerging markets like Brazil and Indonesia, we can see the gross NPA of India is 4.6, whereas in Brazil and Indonesia, it is pegged at 3.1 and 2.1% respectively. So it is a big difference between where India is and where these emerging markets are placed. Also, coming to deal with these NPAs, the government has proposed for the asset reconstruction companies, whereby the sponsors of these asset reconstruction companies would have 100% stake over these companies. So, because the asset reconstruction companies, the ARCs, they have a capital base of 3,000 to 4,000 crore. But the NPAs right now, or the bank base, is around 4 lakh to 3 lakh to 4 lakh crores. So the government has proposed that FDI limit should also be increased from 49% to 100% under the automatic route, so that these banks can do their business more easily, and it can lend out more to the public to further generate investments. Coming to what we expect in the 2017 budget in this banking sector is firstly, government has stated that it would infuse more 10,000 crore for this coming fiscal year. But already 25,000 crore allotment, which has all been done in the previous fiscal year, it was seen that it was too less of an amount. So these banks are requesting the government to increase the amount so that they can keep aside their NPAs and start with their normal functions. Moreover, there is a need, or there is a suggestion for a national asset management company, NAMCO, which is a special purpose ARC, which would deal with large loans mainly on the infrastructure, telecom, power and steel sectors. They would be helping these banks to do business more easily and provide more loans. Rather than going for liquidation of the banks, they are now suggesting for rehabilitation of the loans. Also, there were other suggestions which the banks gave was tax concessions for bad loan provisioning. We have a meager relief of 7.6%, which the meager tax relief which the RBI, which the government has set for the banks, but now these banks are suggesting for moving to 100% tax concessions. Lastly, we have also the Bank Board Bureau, which was constituted in 2016 for suggesting strategies for fiscal consolidation or for debt recovery. Now, the major problem for 2016, which we saw, was this Bank Board Bureau was mainly restricted to appointing chairpersons of various public sector banks. They were very restricted to that. So now the powers of these Bank Board Bureaus have been increased. They are trying to help major fiscal consolidation like mergers, and they're also giving strategies for the PSUs to reduce their stake, reduce more than 51% stake in the PSUs. At a trial case, IDBI last year, the government was planning to reduce the stake in the IDBI, but it has still not been implemented. So the government is planning to increase the power of this Bank Board Bureau so that fiscal consolidation can take place and the banks can do their business properly. Thank you.
Thank you, Paulomi. Thank you for telling us about NAMCO. The panel is open for discussion if any questions.
Only ask just two specific questions, from the students. You mentioned about capital infusing to the public sector banks. Now, many private sector banks feel that by the finance minister, by infusing capital to the public sector banks, is not providing a level playing field to them. With the liberalization, the government ideally should not subsidize the public sector banks. Secondly, there is a perception, not a perception, it's a fact that the non-performing assets of the private sector, the public sector banks, is around 6.1%, whereas for the private sector banks, it is much lower. It's below 3%. So there are two suggestions. One is, why infuse more money from the government budget? To that extent, you are inflating the expenditure, you are subsidizing inefficiency. Why don't you disinvest? Because many of the banks, public sector banks, have equity of 70%, like the State Bank of India. So why don't you disinvest? Some of the people are also saying that why don't you privatize? I mean, the short point which I am trying to make, that should the government keep on subsidizing the public sector banks or promote efficiency at par with the private sector?
So the thing is, these private sector banks, the NPAs in the private sector banks are way lower than what is there for the public sector banks. Now already there have been talks of SBI merging with all its 5 associates. Already the talks have been going on, but there has still, the implementation is yet to take place. And the major thing is, these public sector banks, already, though they have the Indradhanush plan talks about fusing 70,000 crores in total in the next 4 years, but there is still more 1.18 crore of funds which is still more required by these public sector banks, which again the government is suggesting that they would recover it from the market. So the government is trying both to subsidize as well as to disinvest. They are already trying to disinvest by lowering more than 51% already. So it has to go hand in hand. If it just leaves it to for just in disinvesting, that would not take place. And also because of this, the special purpose NAMCOs which has been created, it is a mix of both public sector and the private sector. And the private sector has a major stake of 51% compared to the public sector, which is 49%, because the government wants the private sector to rise more.
Sir, I'll add to this point, like in the last year budget we saw that even for the insurance company, 5 general insurance companies, while the government wanted to list them. And this year also in the budget we expect that more of privatization to come into picture, and the government should disinvest more, so that not only it's about the fund, it's about the proper going of the business. It's about managing the business and taking it to some other level also. So we really expect the government to come up with more of privatization. Okay, I would like to ask a question to Rahul. Rahul, you talked about ATMs. You feel that in the last year budget, the government planned to increase ATMs. But this year we are expecting the government planning to decrease the ATMs and increase POS. So this is totally contradictory and in a very fast pace. What do you think? It is going to help the economy because it's just 1 year and a drastic changes and changing in reforms, changing in decisions. What do you feel the government is actually trying to approach? If it had already plans of demonetization, some amendments would have already brought up in the last year budgets in accordance to that. But totally contradictory statements being made. What is your opinion?
See, it will surely be a contradicting statement, because did you knew that demonetization would occur? No one hoped for. So if government had some plans also, it didn't disclose. So from that point of view, it had said that it will increase ATM to reach out to the rural sector as well. But since demonetization happened, Indian government is pushing towards the digital era. So there is need of more of POS than ATM, because ATM will increase more of cash transactions, whereas POS will increase more of banking transaction, digital payments through debit cards and credit cards. So that's the main reason of huge expectation, and our Dean sir also said it's the most liberalized budget to be presented this year after 1991. So you never know what there is in the mind of governments. See, because to contradict rules also, India is a land of jugaad. After demonetization, there were 4 days given by our Honorable Prime Minister to exchange their old currency notes over the counter, which bank managers manipulated it very well. Huge number of ID proofs were given by big industrial account holders who just changed their old currencies over the counter, which didn't accounted for their banking transaction, and it's also difficult for the income tax department to make a trace of it. And talking about last year, government made a declaration scheme to those people who have huge amount of black money to disclose it at 45% tax rate. But how many of them disclosed it? Here the role of chartered accountants come into picture. They are the manipulators. They manipulate the mind of investors that you should make investments this way, that way, so that you won't have to pay much of taxes. So people wait for those loopholes or opportunities to disobey the rules.
Okay. Thank you, Rahul. Any questions? So these two for the Q&A session.
One more issue, I think, not missing at all, that we are going to move towards a digital cashless economy, isn't it? Now, what are the main expectations from this budget? That means what kind of incentives are going to be given by this budget? What are the expectations by people to encourage digital transactions?
Sir, I would like to add a point that for transactions up to rupees 2000 made by a debit card credit card or any mobile wallets or something like that, government is charging 0% service tax for
But I
it.
think that what are the further, what are the further incentives? You see, the government has already made a beginning. See, today only 20% is today the digital economy size, and we intend to increase it to 40% during the next 5 years. It is a humongous task, So what are the incentives that?
Sir, I
That's a
would
very
like
big
to
thing.
add.
Yeah, please.
Okay. I would like to add, going cashless, the major incentive which the government is providing is tax concessions to these individuals. Already we have seen in these petrol pumps that if you're using your credit cards or your debit cards, you're getting a tax concession. The major part is being filled up by these petrol pump owners or the petrol pump managers. It is being paid by them. So already it has started taking place.
Discount of 0.75% is given for transactions made at petrol pumps.
Srishti, what do you think that when you look at the capital market, the change in the structure which is going to come, like when we look at LTCG, long-term capital gain, so that period which was before 1 year, now we are expecting that that period will increase to 2 years or 3 years. So what are your views on that? What do you expect that will it hamper the investment in our country, the foreign inflows in our country?
No, I don't think so. It will hamper the foreign inflows in our country. The tax is increasing to a certain extent, but the benefits are, as the tax increases, the benefits are also increased, which would attract more and more investors and lead to more inflow of foreign exchange.
Thank you, our panelists. Thank you.
One point. What you could kindly do, all of you, those who would be talking to the next panel, it's a wonderful, presentation by each one of you. I think all of you have gone through the whole thing very, very painstakingly, very, very good things. What you could do, that one is introduce this topic, then throw it open for everybody to, because this is the first one, like the first live, it will take a little confused. Later on it will be far better. Secondly, at the end of the deliberations, if you could just sum up your recommendations. So that would be really good. You start by positing the problem, ask each one to give his viewpoints, then there will be discussion. At the end, you say, these are the viewpoints, and I plan to send it to the finance minister. We did that in law school, if you remember, Poulomi, and we got I plan to send it to the finance minister. Okay, I'll say this. These are the recommendations of KIIT School of Management. This is not we are not giving any lollipop to all of you. It would be a lollipop to the finance minister, if he takes it. Okay, so just sum it up and give them a big hand at the end of it.
I'd like to say what we as students expect from the finance minister in the coming union budget is that the GAAR should be implemented, which has already been postponed for many years. The GST should be active as soon as possible, as we see that it is getting postponed time to time. So we want that one taxation for all and cover up all the indirect taxes should come up into picture. More taxation incentives and more ease of doing business for startups coming into our country, so that the investments into our country can increase, the foreign inflows into our country can increase. Other than that, I will say that we are even expecting that this time the LTCG, that limit which we have already discussed, will be increased from 1 year to 2 to 3 years, which has not happened since last many years. So these are few of our expectations, and we even feel that in few years our country to become one of the most awaited and most attractive investment destination of the world. Thank you. Thank you, sir.